Hey everybody, Boris with BK Forex. Welcome to the weekly technicals for Euro dollar, dollar yen, pound dollar for August 7th to August 11th of 2017. And I think the theme this week really is turn week. After endless and relentless selling of the dollar for the last month and a half, it feels like we ran into a little bit of profit taking at the end of the week. Certainly US data helped. The non-farm payrolls were pretty much in line, 200,000 print, 0.3% growth in wages. All of that is good enough to keep the Fed very much on path towards another rate hike. And ultimately, that should put a little bit of a backbone underneath the dollar. Certainly, the commotion in Washington, all of the turmoil that we're seeing, probably having a little bit of a weight on the dollar. But most of it is kind of sold out. We're now going to go really into what we, in the northern hemisphere, pretty much call the dog days of summer, because it's the beginning of August, and there's literally going to be no activity in Washington and Wall Street, in New York, everywhere, basically, as everybody goes, in Europe as well, as everybody goes on vacation here. Although, having said this, August sometimes can be a very, very turbulent month on unexpected geopolitical risk. But assuming that we don't have any kind of geopolitical risk, I think in many ways volatility should be relatively dampened. What happened last week, I think, was interesting, is that we really ran into an exhaust point on the euro, an exhaust point in a pound. And probably, in my opinion, the beginning of next week is going to very much continue. We'll take a look at the technicals. You'll see why I think the currencies have really kind of turned, and why the smarter trade now is going to be to short any anti-dollar rally, meaning short a euro rally, short a pound rally, get underneath the dollar yen, because the continuation, I think, pro-dollar should continue for a little bit. The calendar is very, very quiet. We have literally nothing on the European side here. German trade balance. In the UK side, we have industrial and manufacturing production as the only real data set. And on the US side, the couple of important points are going to be Thursday, Friday, which is the PPI and the CPI. Now, yes, if inflation comes in super cool, that should have a dampening impact on the dollar. But the market is not looking for any kind of hot inflation anymore. We're still very much sub 2 at 10 basis points month-to-month increase. You can see over here the expectations. Therefore, the surprise really is to the upside. It's doubtful it's going to be any more dampening than what it is now. But if it comes in at close to 2%, as a matter of fact, if CPI prints at 2%, that could be the spark of a massive short covering move and a massive profit-taking move in the anti-dollars. So there is a potential here for even more dollar strength as we go forward. But as you can see, the calendar is just barren. It's truly the dog days of summer. Looking at the levels here, the euro basically kind of capped out at 1900, and now looks very much like it wants to come back down towards the 1600 support. What's interesting about dollar yen, we did not get a really strong follow-through on Friday against the NFPs, but at the same time, this 110, which has been battered and beaten quite a lot, has held really the 109.50 to me, super strong support. And as long as that holds on a short-term basis, dollar yen is a mild buy to the upside. And cable really did flame out. We had very dovish Bank of England. Market really surprised the market that the Bank of England was so dovish. And I think that put a cap into this 132 rally that everybody was looking for. Now 129. Cable comes into the week hobbling as I think one of the weaker currencies into the trade. So now let's take a look at the charts and see how everything sets up. So here's the weekly, and this is what I'm talking about, the flame out. We had a very, very strong move. Let me get this a little bit bigger. You can see we had a very, very strong move, of course, for the last 3 or 4 weeks, and we've been nothing but just buying the euro. But this was the week where technically I think we got the signal for some profit taking. And the fact that we failed at the highs here, big, big profit taking at the end of Friday, very, very similar to the kind of signature that the euro poses over here, where when it makes the turn, it tends to really signal a more longer downward move here. I don't know. My initial feeling is that I think the downward move here takes us to 116, but given the fact that we're now at this technical structure, I certainly think we're going to make 116 before we make 119. Therefore, every rally here is a short with a natural pull down to 116 as all of this profit taking begins to take shape. It's going to be quiet, but I think that this, at the same time, having built up so much profit already over the last couple of months, as the euro starts to decline, the pressure to sell is going to accelerate. So there'll be just technical flows here that can take us to 116. Once we take 116, it's actually going to be quite possible for us to come back and test the 115. What's the high over here? This was, well, no, this is the high is 116. So former resistance becomes current support, a classic technical formation. We're talking about really about 170 pips here to the downside. So I think this is one of the more fruitful trades here to the downside as we start the week. Dollar yen is the exact opposite story. So we held, and I think despite how weak the pair has looked, if you sort of look at this segment, which is the nearest term segment, we're still actually in an uptrend. We're still holding higher lows. And as long as this low, this is like 109.90, 109.80, holds really, as long as this is actually 109 low over here. As long as we can hold above that, as long as we can hold above 109.100, dollar yen still remains a modest buy on the dips. The resist here is 1250. A little bit higher, of course, is the 1400. But it's not impossible to imagine that we get a continuous rally through the week, especially if U.S. yields begin to rally, if the market starts to feel a little bit more bullish about the prospect of rate hikes. So you're completely wrong if we take out 109 to the downside. 109.50 was already a big red warning flag or yellow warning flag. But up until that point, I think the trade is to the upside. Now, cable definitely had the weakest trade last week. And look at the turn here. We flamed out on BOE. This is the weekly chart. And now the support really comes in at around this 130, almost certain to be tested at the beginning of the week. But the 129 is the true support here. That was the big breakout. We sort of, we consolidated 25, 29 for quite a long time. That broke out into the 30, 32 corridor. If we go back to the sort of the 25, 29 corridor, right back down, that would be a very negative tell on the UK economy. We don't have much data, as I said, so a lot of it could be just simply rhetoric. And manufacturing industrial production, we'll see if that has any impact on the trade. But cable looks to me like it got exhausted. If you look at the, let's look at the daily charts here. It's just, second day of very, very sharp sell-off post BOE. Yeah, into this 130. If you look at the dailies, it's certainly 130, which is former resistance, becomes current support. But I think that support gets broken, and we really get tested all the way down to 29 at very minimum. If we break 29, we break the whole pattern of this upward trend move, because that becomes, we take out this lower low, and therefore create a much more distributive pattern. So I think cable is very vulnerable. At this point, to me, the beginning of the week is all about buying the dollar on any kind of a rally against it, or just simply straight up market, because the continuation here is for a pro-dollar trade as we start the week.